Good morning, traders. Welcome to Admiral Markets. My name is Chris. We'll be looking at the charts, of course, today, looking at technical analysis on the Forex market primarily, but we'll take a look at commodities and stock indices as well. This is focused on price action and patterns, by the way. Before we kick off the webinar, though, please be aware that this is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Before we take a look at charts, though, please bear with me for a minute or so. As we take a look, there is, of course, always the need to take a look at the calendar, which you can find on the admiralmarkets.com website. Among other things, you'll go to Analytics and click on this calendar right here. In Analytics, you'll find other things like the market heat map and technical wave fundamental analysis or articles. A lot of good stuff there, which I highly encourage you to discover and explore. Regarding the news events, though, be aware of that. It can always, of course, affect the trading and the setups and the analysis. There's a GDP growth, for instance, in the Eurozone, Germany coming up, which will show the quarter results and the yearly results. That's going to be interesting to see how Germany's economy is behaving in recent time. We got the inflation rate, of course, on the pound. That's a big one as well, forecasted to go higher. So let's see. If that is so, that could indicate some potential pound strength, because inflation, of course, is something that could lead to interest rate growth, which is actually interesting for investors to have that particular currency because it's generating more return. All right, so regarding that the heat map, by the way, you can see that right here, and you can see just a quick look at taking a look at the currencies, that the pound, New Zealand pound odd, again being one of the most volatile currencies. Those do tend to take the gold medal there. Pound yen moved a lot as well. All of these pounds showing strength, close to 1% movement to the upside on Monday trading there. Ones that don't move too much, Euro Swiss see often here at the bottom on the left, somewhere in the middle. That one doesn't move that much, does it? Euro pound, surprisingly, making a pretty good downside here. The pound probably being the bigger mover. Pound usually number one indeed. All right, let's move on. I think there's some interesting stuff going on the dollar yen. I think there could be a correction completed. Now, I know that Nenet has a potential setup already going to the downside, so it might not be completed as yet. There is a gap here, as Nenet talked about if you follow his Twitter account, for instance, you will be aware of that he talked about the potential short setup for downside. I, yesterday, in my Monday recap video, which you can find in the technical analysis part of Admiral Markets, also talked about the fact that I think that this could be still a bouncing spot, but it could retrace lower as well. So it's making that retracement as we speak. And it's, in my view, making a ABC pattern. Let me open my drawing tool quickly. So it's making this particular pattern like that. Now, whether that ABC is finished, that's always that's not an easy equation, and in this case, it's a toss-up. I mean, technically speaking, it did go to a deep 88.6 fib, which means that the 272 target could be actually the turning spot. You know, that's why also one of the reasons why I think that Nenet's target was aiming at 113.20, among others. Other reasons, there's a confluence of support there. Now, I missed that. It went down to 113.25 by 5 pips. So technically, it still could hit that target, but price is moving up pretty fast at this moment and has moved away from that level some 25 pips or so in the meantime. So these are one of those things that, you know, it's the markets are pretty precise when you use fibs, but sometimes they just, of course, can miss a tad and leave a question mark whether the target has been hit or not. I would probably still be on the cautious side and wait for one more push lower, maybe even to 113 and a minus 61.8 target before looking for a bounce. I think if it does hit 113.20 or 113, those could still be very strong support levels for a bounce. And I think that there's a ABC pattern here, zigzag completed. So that I think is interesting, and we could see upside from there, I think. All right, looking at this hourly chart, we're in uptrend. You can see clearly higher high, higher lows. On a 4-hour chart, this is still a downtrend, I would say, because this could still be a hook back within this motion. If you put, let me get rid of the mini terminal for a second. All right, if you put trend line like that, then we had an early break yesterday, a first break, but that's not everything. Yes, it is a breakout potentially, but price is already moving lower and getting closer to being back in that downtrend channel. So this could also be a false break, and this could be an overthrow within the downtrend channel. So on a 4-hour chart, I would still say it is downtrend or at least reason to be cautious. But on an hourly chart, I think we can clearly see some good potential for upside, considering the fact that this is, I think, a 5 wave. There could be a bigger ABC pattern and then a continuation like this. So how much of a correction we get is the question, whether price would make it all the way down here or will it only make down here or even down here. So there's still a lot of space, I think, for price to make a retracement down before we might get a bigger bounce. That's why I think it's a bit too early to look for bullish bounces as yet. I do think that this is a good zigzag pattern, but I wouldn't think it's over at the moment. Now, nothing is guaranteed in the Forex market, so this could be it, and price might start rising from here and continue like this. So it could hook back to the broken channel line, and we would say, oh, this was a 272 bounce. It just missed it by a few pips, and that's possible. We don't know. So my alternative would be to look for a break above the pivot and a break above this resistance. If it breaks through 113.75-ish area, then there's a good chance there's a breakout going to occur to the upside. I think in that case, some good hourly candle closing above 113.75 with a close near the high, then zooming into a lower time frame like the 5 or 50-minute chart, I'll look for a bull flag, a retracement of that candle, and a continuation for more upside. So that's my alternative way of approaching it. So for the moment, I'm expecting the zigzag to continue either to 113 or even down to 112.25, 112, both being bullish bouncing spots. Or if it doesn't do that, then I will look for good breakout candle, small bull flag, and continuation. If possible, of course, if I can possibly catch that breakout, then that is how I would do it for more upside. So this is how I typically approach it. If I'm not sure if the fib has been used properly, or if I'm late, or if I'm not sure if the retracement has gone deep enough, then there are a couple of ways to do it. Wait for a deeper retracement, wait for the breakout as I'm showing here, or take a scout. A scout means take a small position here at the level at the early level. Now here it kind of missed a bit, but let's say it would have touched 113.20. Take a small position there, see how it goes, and if it continues, we have a small position and I could potentially scale in another one as it breaks. And if it bounces but doesn't and then turns still for one more push, I can move the early scout to break even and then try to get the normal position at a deeper retracement. That's also a third way, another option. Not something we have to discuss here because price has moved away from that area already. But just something I wanted to explain, that could be a potential, that could be a possibility as well. So any questions on this dollar yen? Any questions from what I've, what we discussed so far? Now, from a daily perspective, we got to be aware of the fact that price has hit the 38.2 fib and clearly has bounced at the 38.2 fib as well. That's important because although price on a 4-hour chart arguably is in a downtrend, we do see on the hourly chart a strong reaction to the upside, and therefore we can already talk about some upside momentum there. Why is the daily chart important is because the 38.2 fib has been respected, as we can see on the hourly chart. Price has stopped at the 38 and turned at the 38. And why is this 38.2 fib very important? Because look at this momentum. Very, very strong momentum. And price has really accelerated there a lot. If we put a fib from here to here, you see that the price went all the way up to the minus 2,618 target. So this is probably a wave 3. And this is probably a wave 1 and a wave 2. Just looking at this sheer momentum and how far price has pushed in relationship to the fib target, we could therefore assume that this is a wave 4. Wave 4 are typically lengthy and corrective and often stop at the 38 or the 23.6, or third option is the 50. So the fact that it stopped at the 38 is fully aligned with what we would expect from a wave 4. Corrective, as it has been, stopping at the 38 after a clear, strong momentum, which is wave 3, probably, and a wave 1, 2. So yes, the 4-hour is in a downtrend, but we can see reasons why price would be turning for wave 4 into a wave 5, which means that the downtrend could be over and we might be at the start of a wave 5, which is bullish to the upside. That's why it's important, and that's why this breakout was important too, the one I just showed you, because that could signal the upside. Do you hear me at this very moment? Because Tony is not hearing me. So I want to check if it's only him or if it's everyone else that... Okay, great. All right, thank you so much. From a weekly perspective, by the way, very, very quickly, we can see as well, by the way, that price has made a 5-wave pattern up. And is, in my opinion, there's a good chance that this could be an ABC. Now, whether this particular part is part of a continuation or whether this upside could be actually a larger correction, that remains to be seen. I think both are really possible. So that's why it's important to see how price will respond at the 38, how it will respond at this top, because there's no guarantee that this particular moment will be the upside break. It could turn into a complex correction. In fact, maybe it has slightly better odds than an immediate follow-through. Once price starts to correct, it can correct for a while, and we're looking at a weekly chart here. So, this was, let's say, relatively simple, right? It was just trending upwards, and it made a 5-wave pattern pretty clearly. The ABC zigzag was also not much of a, let's say, I wouldn't say a no-brainer, but quite logical reaction to the 5-wave upside. It could be as simple as this is an A or 1 and this is a B and we go up for a C. But could it turn into some kind of complex correction where the wave B blue is further in time and this still goes one more time down like that? Yes, that's why we need to keep an eye on the 38, because if it breaks again below the 38, then it is probably a case like that, and it is probably a complex correction, and price might start falling to the 50. Might get a bounce there, fall down to the 61.8, make a correction, fall again, and down we go the ladder, down we go, hitting the targets, breaking, hitting the targets, breaking, and continue like this to retest maybe this bottom, and I wouldn't be surprised then to see a bounce and a triangle emerge like that, and then probably eventually that triangle will break to the upside. So that's why it's important to see not only this trend line but also this top and the 38. Those are key levels to understand, are we going to get this or are we going to get this from a weekly perspective. So I think that's really about it. I mean, from my perspective on the dollar yen. I think we might see some zigzags on the Kiwi and the dollar CAD as well. But let me first take a look at the euro dollar. All right, so we see that yesterday, I'm not sure if anyone saw the video yesterday, but price was heading up. I said, take a look at this particular zone and this zone for rejections. And so it depends what you thought about this wick. If I remember correctly, I was talking about the 4-hour chart to monitor it on the 4-hour chart. So if you thought that wick was sufficient reaction to that resistance zone, then you might have entered at the close of that. Or you might have entered as it retraced even that wick a bit, as you can see. And if you put a fib on that 4-hour candle, we had a 61.8 retracement. So both are valid. If you didn't think that wick was enough of a reaction, then that's fine too. Then you didn't take that trade, and there's nothing wrong with that. That zone, though, I thought was critical, and price moved away from that for a lower low. At this moment, it's retracing back up again, and we have a pretty sturdy 4-hour candle at this moment, with the close near the high, engulfing actually the candle before that. So we're looking at a pattern which is called bullish engulfing twins, and that is a bit scary for bears. Anyone who's in that trade, I talked about 105 as a target, which we obviously haven't reached yet. So unless you discretionary already took some profit, perhaps at 106, then the trade is still open. And in that case, I think it's best to move it to either above this candle right here, this high and this high. This is a strong bearish candle, that high, or this is a strong bullish candle. That's around 10, just a bit above that, or just at break even, right? So that depends. Small difference anyhow. Because I don't think it makes sense to hang in this trade with this bullish engulfing twins that could send this. I'm not sure how far. We'll analyze it soon. But I don't think it makes sense to keep a stop loss just above here or here. And that's kind of in harm's way at this moment. You see, the dynamics have changed, in my opinion. At that time, that was a good stop loss because after the reaction, it was a good stop loss to put it above this high, because at that moment, that was the invalidation level for a downtrend continuation. At this moment, if it does start to retrace, and if it does start to break this resistance trend line, it could actually start to retrace the entire swing high, swing low, which means that I would put a fib from here to here, and in that case, who knows, it could stop at the 23.6 for a while, but then break up to the 30, 50, start breaking up to any of these fibs. Any of these fibs could be a turning spot too, by the way. But there's plenty of space to the upside, because then we're starting to use, most likely, this entire swing high, swing low. For the moment, this is a nice channel, but if it starts to break that channel, we don't know how far this could push. Then, as you can see, the stop loss being placed right above here is quite shallow, because in that case, it's only above the 23.6 fib, which really is in harm's way. So at that point, when we had the reaction in that zone, it made sense. At this moment, the structure is different. Doesn't make sense to leave it there. Got to protect that trade, move it into some profit or break even at the very least. If it does break, it can push. If it turns still, then great, we'll get more pips. If it doesn't, then no risk is on the table. Now, that's one thing. Let's take a look at, we got a pretty neat channel going on here, but as you can see, price is not getting too close to the bottom of this channel anymore. And if we put a trend line like this, we can see that it's slowing down. As I showed in my wave analysis today, the speed at which it's traveling to the downside is significantly reduced at this moment. It will really need to break below 105.90, and we might see an acceleration down to 105 like that to fill that gap. That's the good news. If it does do that, there is a lot of space down to that channel. It's a pretty narrow channel anyhow for a 4-hour chart, so there's plenty of space right there to break that support and test 105.25, 105 at the very minimum, if not even a further extension later on this week or this month. So, but how about if it doesn't? If it doesn't break here, and if it breaks the resistance, then this is a significant importance, because in that case, this is not maybe the start of a new downtrend, and it could still be a correction of this choppy upside in that case. Or because it's complex, and complex corrections might get more complex, this could be just a correction A, B, C, and we might still make one more correction up before price still continues with the downtrend. Unfortunately, this is the reality that we live in at the moment when you have complex corrections. That's why at this point we need to keep an eye on trend lines, fib levels, key decision zones. At this particular time, that was a key support level which got broken, and we did get the downtrend continuation. That's why we need to keep an eye on resistance and support to see what is most likely, and these fibs. But if it does break resistance, this particular part is not tremendously impulsive. Now that could still, I haven't done the details and worked out the details. For the moment, I think that this is still a potential wave 3, but it really needs to break support, and if it breaks resistance, then it's not a 1, 2, 3. Right? In that case, I have a 1, 2, 1, 2, I think, of various degrees at this moment. So we need some acceleration for that to materialize. If it doesn't, then these are not 1, 2s, 1, 2s, and I would have to recalculate it. But in any case, we should see some bullish breakout to retest these fibs. Alrighty, now 105 is important too for a potential inverted head and shoulders. If that happens and we do get a bounce at 105, you know, there could be a move up to the next fib, the 61 or the 78.6 fib. But if it breaks 105, then of course we can get a retest at the bottom. So we'll have to see how this, if this space gets filled up from here down to 105 and the potential inverted head and shoulders, and if it breaks or bounces. On a very low time frame, let's take a look, or not very, very low, but 50-minute chart, we're looking at a potential retracement. Of course, we're still in a downtrend, so this could just be a simple retracement, and we might not get the reversal breakout here. From my perspective, this fib is important. Like this. Let me get rid of the other fib. All right, there we go. And if this is a 1, 2, 3, this could be a 4, but in that case, it should not go back into the territory of the wave 1, 106.34-ish, and it should probably stop at the 38 or 50. So from that perspective, this is a, this could still be a correction, ABC correction like this. And that could be the first turn, hook back and continue. At this moment, 1, 2, 3, 4, fifth candle right here. So yeah, this could be an interesting potential for a down continuation right at this moment with a stop loss above 106.35, which is the invalidation level of this wave 4 and 5, and the target go anywhere around 105, 105.25, probably 105.25. I don't like to aim for the very last part of the profit, 105.30 probably. That would be about 82 pips. The stop loss size is around 30-ish, could be a bit less, 25-ish. So that is an interesting reward to risk ratio right there. And this is the fifth candle, so it's possible to wait for this candle to finish. From a time factor pattern perspective, I like to wait 5 to 6 candles, not breaking a high. That indicates that this swing high, swing low is probably over. That moment would be at the end of this candle, 1, 2, 3, 4, 5, or the next. So if this one is bearish or not too strongly bullish, then I think that is a good chance that this particular swing is over, and we might start a new swing, and that new swing might be the downside. Of course, trading is something that we never know for sure. So who knows? This could be an A, this could be a B, and we go up for a C like that. In that case, of course, the trade ends in a loss, unless there's a trade management somehow to reduce the risk. In that case, what I'm looking for would be, for instance, a very lengthy sideways move, another 1 hour, 2 hours. Then this is starting to look like some kind of channel after a momentum, and then it doesn't look good. In that case, moving into break even does make sense. So, anything else? Well, the reward to risk, of course, even if that doesn't work out, is interesting. So, that's one of the advantages of working with good reward to risks. It does compensate more. So about a minute left. We might as well wait for this candle to finish. It doesn't look like it's going to finish bullish, bearish. I mean, at the moment, it looks more bullish at the moment, but let's see. We have about a minute left. If this is bullish, I'll wait for the next candle to finish. And let's see if this is a turn. It's hitting the moving average again the second time. It is also hitting the pivot point. So, that makes sense. All right, so the candle closed bullish. So definitely need to wait one more candle, 50 minutes from now, to see how that reacts. Problem is that for the moment, this has been a pretty steep retracement, pretty aggressive retracement. So being a bit actually extra cautious, I think, does not hurt. So waiting for this candle, I think, is optimal at this point. Let's see how it responds as it retests that top. If it does break this particular high, all right, then the correction is still ongoing. If it doesn't break this high, then this could be the first start. This is a hook back, and we could see a continuation to the downside. So whether it breaks 106.24-ish is important. 106.23.5. then we'll know more about this particular 15-minute structure, whether this is indeed a wave 1, 2, 3, 4 completed or not. All right, regarding the pound USD, it looks more bullish. It is trying to break here, but this particular upside does look a bit choppy at this moment. I do think I had this as a wave 1, 2 this morning. Maybe I was a bit too enthusiastic when I woke up about the pound USD upside potential there, because if I look at it now, this is starting to look pretty corrective, although I didn't have this particular reaction yet visible, so that of course does change things. If we would have kept pushing, then that's something else, but we had a pretty strong bearish candle here. This kind of, I would say, hurt the case for a bullish wave 3 pretty substantially. Now it does look more corrective, and we'll have to probably reanalyze it a bit. I think that this does look like a 5-wave up. This is a correction down to the 61.8 fib. But we're kind of stuck in the middle now. We did break, but we're moving down. It's kind of, you see, it's almost like price is right at a sort of average at the moment here, with a break up and a break down. So it's maybe not a great spot for the pound. Of course, it could be a hook back to broken resistance, back to support levels as well. So that is possible. Good thing might be to take a look at 5 or 15-minute chart to see some kind of bounce at the support. I would not take a pending order on that, but it could be a bouncing spot. If it doesn't bounce and it breaks, then it might go to the bottom of that zone, which is about the S1. I would not be interested in trading that. I would probably only be interested in trading it to the downside if it breaks this trend line, shows a bear flag, and then continues. In that case, there could be space down to the 61 and the 7 or the 78.6 fib. Until that moment, this is more of a bounce spot, so I'll be interested in keeping an eye on that. But I'm not jumping for joy either, because so far this has been, specifically with this last move, starting to look a bit more corrective as well. All right, Kiwi looked like it's completed a ABC as well, as you can see, through kind of a correction like that. Now, let's take a look here. For the Kiwi, I was hoping for a bit deeper pullback to the 38. It stopped at the 23.6 fib, then turned, made one slight lower low, and it's going back again. So it does look more like a correction for more downside to me. Hourly chart is pretty choppy, and it seems like it has been making a zigzag correction here back to targets. It did stop at the target and turn back down, so that's already behind us. That already happened. But now, for the moment, if it breaks support, we see a pretty good momentum here. So if it reacts to support, makes a correction like this, maybe, for instance, a head and shoulders like that, and then breaks the support, there could be a continuation of the downtrend that we already saw here in the red arrow, the first red arrow. So that could be interesting to keep an eye on, this fib as well. And you see that this is around the 50, 61.8 fib. So that could be a rejection spot 2 for the Kiwi. So let's see how this moves up and how it reacts to this. It could be a first turning spot. The breakout could be the second. That's the Kiwi. All right, dollar CAD is I think still making a correction to the downside. It would need to break that resistance to be out of that correction. We can put probably a channel on that correction, roughly like this. Pretty close to the bottom again. In the meantime, price did break below this support trend line, which was a triangle to the downside. We can put a fib, let's put it from here to here. See how that works. Pretty good 50 fib hit, pretty good 61 point fib hit. So next turning spot could be the 78.6 fib. That would require price to kind of peek through that channel or go sideways and hit that channel a bit later. We can also put fibs on the opposite side. And start fibbing this downside here. I think a good fib to start is probably this. 50 fib hit. And we see there's a minus 61.8 target neatly lined up with the 78.6 fib around 130.20, 130.30. So that could complete a zigzag, a bigger zigzag like this. Bounce spot at the bottom of the channel. We got space to the upside of that channel, and if it breaks that channel, a lot of space up to the top. Maybe this could still be a resistance level to think about too, but generally speaking, that space is available. And if it breaks that top, in that case, we could see even, of course, an extension beyond that level. Let's take a look a bit at that potential. Let me get rid of these fibs. One more last look at these fibs so you can see how I did that. Let me get rid of them now. And from a bigger perspective, how far could this push up go? Of course, so far this has been quite choppy, don't get me wrong. This is a strong trend. This was a strong momentum. Now it's choppy. So the main question is, will we get a break? If price does break, does not bounce at the 78.6 fib, right, and breaks this support, then there could be a good potential to fall. In that case, I think there could be the potential for price to, well, get down to double bottom at least, but even maybe move to the minus 272 target. And 50 fib, right? So that's, if it breaks this channel and moves down like this, if it does not break that support and it does hook back to the 78.6 fib and bounce, right? There's also some horizontal support here. It's the bottom of the channel, so there's potential for that. We can have space basically at the top of that channel again, roughly speaking. I mean, we could draw a trend line like this, of course, too, connecting these tops. All right, so if it breaks above, if it bounces here and it breaks above this smaller channel, then there is some good potential space there. Here, there's a bit more resistance already, around 134, 135. So let's see how that handles itself. I mean, another supportive confluence point could be indeed this low here, and of course this low here could build an inverted head and shoulders too. Another reason why potentially 130-ish could be a support level. So we see some good confluence there. Of course, no guarantee, but that does look like a decent bouncing spot. A bit lower though, still, where price has not reached that level, but is getting closer and closer. The euro dollar, in the meantime, by the way, has broken the high. Unfortunately, I would have been interested in this, but it did break the high. That means that, from my perspective, unfortunately, it is not what I thought it was, probably. The sixth candle after the fifth being bullish is bullish too and broke the high, which basically means that this swing high, swing low is not finished yet. That's why I like my time fracture pattern, because it helps me remove some of the trades where the momentum is not finished yet, right? Time fracture pattern has helped me avoid that particular problem in this case. So how far could it go? Well, let's see. If it pushes above here, then something else is going on, and then we might be seriously looking at a break of this trend line as well. So for me to go long, I would need probably price to, let's see, it has to hit the R1 at least, which is around 106.40-ish, right? There I would have to see a bull flag and probably a break of the bull flag, or it goes even further and then makes kind of a small zigzag there and then bounces. It has to be, from my perspective, in this zone. So for me, this is too soon because it's still potential retracement. It doesn't seem very likely at this moment, but it has not hit my validation level, which means although it looks very bullish at this moment, it might be very tempting, but it still hasn't fully, it hasn't been validated yet. So I need that first to happen. I need to see how far it pushes, but this is the space that I would imagine myself trading potentially later today if it does get into that zone to the upside. In that case, the intraday trend is up, and we might have an early breakout on the higher time frames. If it still miraculously stops right here, right now, then the bearish case is still possible. But for me to trade that, I'm not going to trade it now because it's way too bullish. It would really need to stop right here, 5 to 6 candles, not break this high, then maybe build a head and shoulders like this, show failure here, and then it could go down again. That does not seem very likely at this moment, don't get me wrong, considering the 50-minute candle that just closed. But I'm just formulating what I have to see for myself before shorts are interesting at this point. All right, so pound dollar is a bit better setup, I think, although it is moving up correctively, it is still at a bouncing spot, so that makes more sense. There is a pound news event, though, shortly, an hour from now. Be aware of that. But typically, I want to say something else. I mean, if we wouldn't have that news event, then a hook back here could be interesting. Alrighty, this Aussie, let's take a look. Aussie had a bit of a correction here, finished the ABC zigzag. Back into this big consolidation zone. Went down to targets. That could have been an interesting point to look for potential longs. Unfortunately, I missed that. There was, I think, an Aussie news event. I'm not sure, but in any case, I missed it. This was somewhere in my night. Yeah, it was midnight, somewhere like here. Of course, the first bounce was earlier, but if you're looking for the hook back, that was around midnight. It does look bullish at the moment. However, from my perspective, now it's a bit late. If the retracement could have been interesting, now if you consider the strong resistance levels that are close by right here, I think it's a bit too close for my taste to look for still one more push up. I mean, it's really close to massive resistance. So if anything, I would look for a daily candle in that zone, as I said yesterday in the recap video, that shows exhaustion, shows a bearish bounce at that resistance zone. If the euro dollar breaks to the upside, then this could be a five-way finish here instead. This, let's see, this, at the moment I have this as a wave 1-2, a wave 1-2. This does maybe look like a wave 3, but the problem with that is that it went to the territory of wave 1. Wave 4 cannot go into the wave territory of wave 1 unless it's a leading diagonal for wave 1, which is still possible. So that's why I marked this as a wave 1-2, and this is a potential 3. That did seem a bit less likely as it started to become a bit more choppier. So now that seems almost not likely at all. But technically speaking, you would have to hit that blue line before that really becomes official. If that blue line gets hit, then I'm either thinking it is a leading diagonal, but then I think the wave 5 is not long, wave 1 is not really long enough. So it would not really fit that leading diagonal. I'll check that later on a bit more carefully, but I don't think it would meet that description. So in that case, this is not the 1, 2, 3, 4, 5 pattern in that case, most likely. And this is looking more corrective. It's probably in that case an ABC correction. Maybe this is a 1, 2, 3, 4, 5 for an A. This could be a B, and this is a C. So that is what I would be thinking at this moment if it breaks out here. $50 bounce, I would consider that a $50 bounce. And that could mean that this is corrective, we make it another correction. Unfortunately, we might stay in corrective territory. I will reanalyze it after the webinar. Maybe I'll see something that I missed now, but it could be explained by this ABC zigzag. Let me put a fib from here to here. It did retrace to the 38.2 fib. That is important because in a zigzag, the 38, 50, or 61.8 are often most used. It did go to the minus 272 target. So there are some good reasons to think of ABC zigzag, but maybe without a live webinar, I might see something else, but it might make sense here. Pound yen. Let's take a look. Pound yen. Looks like a bull flag. If the yen, if the pound is breaking to the upside, or not breaking but bouncing, it might drag the pound yen too. Technically speaking, momentum to the upside and flat like this should set up for more upside. Price broke above this resistance in the same fashion as the dollar yen, but still, it's keeping its head up, as they say, above this trend line. The break was not spectacular, but it is still above it. So as long as it stays really above 141.90, it's just going flat like this, and I think there is a good chance of a continuation. All right, this is level 3. Yeah, so this is the sweet zone up to 4, and then if it breaks 4 up till 5. So from my perspective, probably a candle. It would be nice to have a candle close above this 142.50. A candle close above it with a close in the high would be very good for a breakout. In that case, I think I can zoom into 50-minute world, and we should see some momentum like this, some small bull flag, and a continuation. Alternatively, if you don't like looking for flags, for instance, it might even be worth it to take the 4-hour candle close like this. But be careful though that be very careful that how it reacts at the targets right here. Probably rather, I don't like the 4-hour idea too much. There's some space here, but I think especially this space is probably better for a lower time frame. And there could be a bullish breakout. This is good momentum. This is ABC zigzag, good bounce. So if it keeps pushing up, if it breaks another time, this small correction, you got space here. If it breaks up, you got space here. It will test this top. If it breaks that top, you get another space there. If it doesn't, then you might see this. So let's see. I think that definitely good bullish momentum at this moment on the daily, on the 4-hour, on the hourly. So I think there's some good potential there for upside. Weekly. If it doesn't break and rather goes through this support, in that case, I'm not as bullish anymore. In that case, it's breaking this channel, or it actually broke already a bit below that, but okay. You can redraw it a bit like this, for instance. All right. In that case, if it breaks through this consolidation, is breaking back into the downtrend. It's also breaking this bullish channel. And I'm not sure how far it could push. It could push all the way to retest these fibs, it might break down to the 38, make a bear flag, and continue down to the 61.8 before it bounces. In that case, I think there is some bearish space to retest these support fibs. And I do think that these fibs have also a decent chance of acting as support, by the way. So yeah, so those are my thoughts on basically both breakout scenarios to the down and upside of this particular zone in the blue box or blue circle right there. For more updates, of course, I would like to refer you to tomorrow's webinar strategy. We'll take a look at Fibonacci and waves. And then in the evening, tomorrow evening is taking a look at news trading. And on Thursday, we take a look at gold, XAU, USD. We take a look at technicals on all different time frames. Special focus on XAU, USD. And next week, of course, we're back pretty much the same schedule. And you'll find, in the meantime, of course, also more analytics in waves and technicals. And besides the webinars I just mentioned and the articles that you can find right here in this part, and also in education and articles. So hope to see you in the next webinars, and wish you all great trading, folks. Talk to you soon. Cheers.